The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 8:30 a.m. Monday morning. Hope everyone had a great Easter weekend, Passover beginning as well. A little bit of a different feeling during quarantine season, but hope everyone had a long weekend from the markets. Markets closed on Friday. This morning, opening up about 12 points in the negative, but the S&Ps, we had some volatility right on the open last night. S&Ps trading almost 100 points in the span of about a half hour at 6 p.m. Eastern time. Things mellowing out a bit this morning. We'll start things off with the S&P. I have a 15-minute chart up there. Last week, quite a week in the markets. S&Ps finishing up about 12% for the 5 trading days as the market continues to rebound off the lows. All the indices now clawing back about 50% of their losses. We'll jump into all those charts in a moment, but let's start it off with the Sunday night action, and there you go. You have the futures, 6 p.m. Eastern time. We open at 28.11. We make it as high as 28.19, and then talk about a sell-off, folks. From the span of 6 o'clock to 6:30, we trade from a high of 28.19, and we reached a low of 27.17. You're talking about 102 S&P points, but from that low, we're now up a bit, 27.70. Your S&Ps are off about 10 points. That's about 1/3%. Even if you look at just where we were at about 6 a.m. when I started really watching the market, we're up about 30 S&P points from 2740 to 2770. Jumping over to the other indices, we'll start things off with the Dow. There's your Sunday night open in the Dow. We reach a high of 23,895, and by the end of the half hour, we were down almost 1,000 points. So again, the high, 23,895. You trade down to a low in the next half hour of 23,232. So you're talking about 650 Dow points. Right now, trading 23,541. NASDAQ 100, we trade from about 8,300, dipped below 8,100 for a moment last night. Currently trading right at 8,200. S&Ps we covered from almost 28.19 down to almost 27.20. Gold catching a bid as well. Gold, you back it up to Thursday, quite the acceleration to 1354. Gold holding steady so far tonight at tonight as in last night. Sunday night, there's your Sunday night futures open at about 1740. We've been sitting right at that level right now at 1739. How about crude oil? We'll get into this in a moment. So crude, we have a record production cut, 10 million barrels they're going to be cutting. But guess what, folks? It might not be enough. Last night, you almost had crude down to a 21 handle. You reached 22.10 in the price of May crude. You climb last night. I was getting ready for bed. I said, crude, maybe it's finding a bid. Up to 24.54. Well, guess what? Maybe not so much. You're down about $1.50 from that price point, under $23. Crude trading at 22.91, and the euro US dollar with some volatility as well, back above 109. The euro trading at 109.27. In terms of the raw numbers out there, COVID-19. Zooming in on the U.S., 557,000 cases. Unfortunately, that death toll just remarkably high, 22,109. When you put it on the world, remarkable numbers as well. Almost 2 million cases, now approaching 115,000 deaths. Hopefully that number coming down. Looking at the U.S. curve, still a tough case. You're supposed to flatten that curve, right? We might not be exponential right now, but we are certainly not flat. Hopefully the flattening continues to occur with some social distancing. Jumping into the headlines for crude. We'll start it off. OPEC and allies finalize record oil production cut after days of discussion. So just for some context, to back things up for the run that we had in crude, remarkable. You really have to go back to last week in terms of where we were. Let's put this on a half hour, 10-day. There we go. The run starts here. The run starts a week ago Thursday. You have President Trump saying that he just talked to the Saudis. There's going to be a huge oil cut, 10 to 15 million barrels. You finish out 2 weeks ago, Friday, at 29. Last week, tough week, lots of problems with that potential deal. But you end last week, again, Thursday's action. I mean, look at this run on Thursday, right? Thursday at 11 a.m., 10:30 a.m. These are half-hour bars again. So between 10:30 and 11 a.m., you were at 28.36 on Thursday. And by 2 o'clock, you were trading at 22.57. That's from a 28 handle at 11 a.m. almost to a 22 handle by 2 o'clock. My goodness, right? But guess what? Looks like the market got it right there. We get the cut that they were looking for in terms of 10 million barrels, and it doesn't matter, folks. You have crude trading at $22.87 for a little long-term historical context. There's your 20-year, and guess what, folks? We're below the 2015 lows. We're below the 2018 lows. You back it up to almost 2000. You're in the 17 range for those lows. Let's see how far we go back to the max. I mean, anything's in play here. The low back in 02, you're talking about $17 and change. In 1998, you made it to almost $10. Quite the drop off. I mean, even since this year, right? Look at that run this year. When you pull it up, this is a monthly. The January bar, we had a 65 handle in January. We're trading at 22, and it's April 13th. Jumping back to the actual fundamentals of the deal, OPEC and its oil-producing allies on Sunday finalized a historic agreement to cut production by 9.7 million barrels a day, which is the single largest output cut in history. You can't, stem, though, the amount of loss we're having in terms of demand for oil when nobody is driving. Tankers aren't running to the degree. You don't have to ship as many products. The whole deal, the economy is shut down almost on a worldwide spectrum. The group, known as OPEC Plus, initially proposed cutting production by 10 million barrels a day on Thursday. Mexico opposed the amount it is being asked to cut, holding up the final deal. Under the OPEC Plus new agreement, Mexico will cut 100,000 barrels a day instead of the 400,000 barrels it had initially been asked to cut. On Friday, President Trump said the U.S. will cut production in an effort to get Mexico, quote unquote, over the barrel. Sunday's emergency meeting, the second in 4 days, came as oil-producing nations scrambled to reach an agreement in an effort to prop up falling prices as the coronavirus outbreak continues to hammer demand. The agreement also ends a price war that broke out between Saudi Arabia and Russia at the beginning of March, which further pressured oil prices as each sought to gain market share. The group, known as OPEC Plus, they were initially looking for 10 million, amounting to some 10% of the global oil supply. I mean, a remarkable number. When you think about on a daily basis, they are going to be cutting 10% of what they were normally supplying. On Thursday, Mexico opposed it. Another interesting story that I'll pull up here. Mexico, Tom sent me this story on the Bloomberg over the weekend. Mexico, one of the reasons that they had such a strong hand in these negotiations is that they use a system of swaps for insurance, and they spend about $1 billion annually. And I'm going to try and hunt this down. I'll pull it back up when we get back from the break. But Mexico spends about $1 billion, with a B, $1 billion annually to hedge their oil in the event of a catastrophic event like we're having right now. So they had already hedged those prices. They had a strong hand. They're not in dire need to cut production because guess what? Even with oil at $22, they already hedged themselves. So they're not in the type of pain other countries are, but that hedge, not cheap, $1 billion a year, but paying off this year. S&P is negative by 10, Dow negative by 95.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got S&P's negative by 11, the Dow negative 104. You have the NASDAQ negative 34. I pulled that article up and let me jump over. So there's your headline I was talking about, right? The secret weapon giving Mexico power in the oil price war. A remarkable hedge that they've had. Looks like Mexico, well aware of the volatility in oil, not afraid to spend some money as an insurance hedge against maybe what could ensue in terms of not even a pandemic, right? That's almost an outlier. Maybe whether it's just an economic collapse, maybe it's a recession, whatever it be, a war that pairs off something. For the last 2 decades, Mexico has bought so-called Asian-style put options from a small group of investment banks and oil companies in what's considered Wall Street's largest and most closely guarded annual oil deal. Here we go. The options give Mexico the right to sell its oil at a predetermined price. They are the equivalent of an insurance policy. The country banks all gains from higher prices, but enjoys the security of a minimum floor. So if oil prices remain weak or plunge even further, Mexico will still book higher prices. The main reason driving President Andres Manuel López Obrador, the left-wing populist, to resist a deal in his pledge to revive oil production is that deal, slashing 400,000 a day to comply with rather than 100. So we already know, this was written 2 days ago, Mexico got their 100,000 barrels a day that they wanted, all right? But here's the deal. So the hedge has shielded Mexico. Now, this is the price of oil, all right? You can pinpoint where that hedge may have benefited. 08, 15, 20. The hedge has shielded Mexico in every downturn over the last 20 years. It made $5.1 billion when prices crashed in 2009 during the global financial crisis. It received $6.4 billion in 2015 and another $2.7 billion in 2016 after Saudi Arabia waged another price war. Well, so what is that? That's 5.1 plus 6.4. That's 11.5, 13. That's 14.2 billion that they have benefited since 2009, and it's only costing them $1 billion a year, and that does not add into it what they're benefiting from this year. So overall, long term, they are benefiting. The insurance policy isn't cheap. Mexican Finance Minister Arturo Herrera told broadcaster Televisa on March 10th, but it's insurance for times like now. Our fiscal budget isn't going to be hit. And it says in here, it costs them about $1 billion a year. Remarkable story if you check that out. But that plays into what was going on. Mexico holding out hard, and nonetheless, they get it done anyway. Taking a look at other headlines out here. So you have China, of course. They had pretty much gotten over COVID-19. Now it's kind of a little bit resurging. I think they got up to 100 cases now. Half of China's infections on Saturday came from an international flight. This can be the tough thing that you see. The next headline I'm going to jump over to here is you have the Minnesota Fed Chief Neil Kashkari, saying the U.S. may face 18 months of rolling shutdowns. This, just my opinion, folks, but it's not like this is going to be eradicated come the end of April or even the end of May. We may see, if you have any type of travel throughout the globe whatsoever, unless it's completely eradicated from a social distancing standpoint on a worldwide basis. Obviously, you can have flare-ups again. Until you get something of a vaccine or treatment, you could see this type of rolling shutdown until that comes. You have the Minnesota Fed chief. He's saying that as well. May face 18 months of rolling shutdowns. Without an effective therapy or vaccine for the novel coronavirus, the U.S. economy could face 18 months of rolling shutdowns as the outbreak recedes and flares up again. We're looking around the world as they relax the economic controls, the virus flares back up again. That was Kashkari on CBS's Face of the Nation yesterday. He is a voter in 2020 on the Fed's policy setting Federal Open Market Committee, FOMC. We could have these waves of flare-ups, and controls until we actually get a therapy or a vaccine. I think we should all be focusing on an 18-month strategy for our healthcare system and the economy. Tough to think about, folks. When you do think about it, though, we've been dealing with this now for about 6 weeks. End of February, when things started really to get real. Beginning of March, when things started really ramping up. But when you see the headlines from China talking about that they have 51 new cases, Chinese nationals on one flight accounted for. Imported cases also arriving across the land border with Russia. Shanghai's Municipal Health Commission said 51 of 52 reported cases on Saturday were diagnosed to have COVID-19 after they landed in the city. The travelers accounted for more than half of the 97 imported infections China disclosed on Sunday morning. Something to keep in mind. Doesn't mean the economy won't make it through. Maybe the market already reacting, saying we know that's going to be the case. That's why we just took quite a haircut in the markets, but that's why it also just bounced back, because we see the end, the light at the end of the tunnel. I'm going to jump over to the front page of TFNN, daily market recap. So I put this up for the weekend recap. Some cool charts in here if you get a chance to check it out over last week. So this was the weekly action we saw in terms of last Friday. You were at about 24.49. You ended the week at 24.80. That's a week ago Friday. Last week closed it out at 27.87. You're talking about 307 S&P points. 12.38% the S&P climbed over that week. Another cool chart in there in terms of the indices. As I mentioned, we've now gained back 50% of the losses in the indices across the board. There's your S&P. We're looking at a daily chart from almost 3,400 down to 2174, and folks, we're up more than 600 S&P points from that low we made, I believe it was March 23rd. You drop down to the NASDAQ, remarkable drop there of more than 3,000 points, 9,700 to 6,600, but guess what, folks? We're up more than 1,500 of those points. Your 50% number, 81.95. You closed out last week at 82.38. The Dow trades down 11,500 points. I mean, it's just remarkable to roll out of my mouth almost. 11,500 points, but guess what? Since then, we're up about 5,500 points from 18,000 and change up to 23,676, 23,814 actually being that 50% in the Dow. Drilling it down a little shorter time frame, checking out some of the movers and shakers. You got to look at Boeing when you talk about the Dow. Boeing, 157, quite a haircut that's taken. Taking a look at some of the FANG stocks. Microsoft, 164, had a high of 170 last week. Google, Alphabet, above 1,200 at 1,207. Looking to open a bit lower today with the S&Ps down about 5. Amazon shares, the king of them all, going to open basically flat at 2,044. Netflix shares, 371, closed out last week at 370. And how about Facebook? 174, closed out at 175. Jumping back to the front page of TFNN, when I had what we also have going on there, tax day, usually on Wednesday, pushed back this year because of the COVID quarantine, we'll call it. But Basil Chapman, Wednesday, get in there, sign up now, folks. Basil puts out a great newsletter, The Opening Call. You instantly gain access to that. He's got about 5 archived webinars that Opening Call subscribers gain access to. You instantly gain access to those because you'll become an Opening Call subscriber. You'll be in there with Basil for an all-day webinar from 9 a.m. till 4:30 p.m. This will be archived. The technical tools based on the Chapman Wave methodology, explained live, a detailed all-day online course, and he'll be talking about your positions, the technical tools, trades, how to stay in them. And you also gain, right when you sign up, he's going to email you a booklet with the key Chapman Wave techniques. So get in there now, get studying today, tomorrow, be ready. Wednesday morning, 9 a.m. with Basil Chapman.
You are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Markets ticking up right near even territory. S&P's negative by just 6 right now. NASDAQ negative 21. You have the Dow negative 58. Oil contract up 19 cents at $22.95, and we've got gold negative $14 technically at $17.37. Jumping back to some of the headlines this week, $1,200 rescue payments going to begin going out. This could take a while, though. It mentioned in here, begun sending $1,200 payments plus $500 for the minor children, though it could take until September for every eligible person to get that money. I hope so. I hope not, folks. That's 5 months from right now. And although this may drag out a bit, the people need that money right now. So hopefully we stay on the government, stay on the politicians, and get that done. Because businesses are going to get the money in days. Why can't people get the money in days as well? Jumping back to some of the stocks making headlines. So you got Caterpillar downgraded to underperform from neutral at Bank of America, which points to severe capital spending downturn in key Caterpillar markets. Caterpillar shares, you see a little bit of a spike action on that. 122.80 closed at 125. Dunkin' Brands got a double upgrade to outperform from underperform, noting both valuation and company's 100% franchised business model. This from Credit Suisse. The firm said that model is one of the most attractive in the restaurant industry and warrants a premium to its peers. Dunkin' Brands, gotta love Dunkin', hometown, Beantown, Boston, from about 58 up to 61.50. Amazon, they're gonna stop accepting new online grocery customers because they can't really handle what they have going on right now. They're putting people on a waiting list. It's also cut back shopping hours at some Whole Foods locations to prioritize online orders. Disney, they're going to furlough 43,000 workers at its Disney World Resort in Florida while allowing them to keep their benefits for up to a year. JP Morgan, the bank is raising borrowing standards for most new home mortgage loans, according to Reuters. The move is designed to lessen lending risk stemming from the virus outbreak, with borrowers now needing 20% and a credit score of 700. And Macy's is hiring an investment bank to explore the retailer's options for boosting its finances. Macy's. How about Facebook? We'll wrap it up. 25% their ad rates fell in March for Facebook. Stay tuned, folks. Larry Pesavento live at 9. Live programming all day at TFNN. We'll be right back.